All right, Brad. This is just a sample of some of the spreads we talked about. I've done all three. This is the July, October butterfly on the lean hogs. I'm also going to show you some Aug Dees live cattle and Aug Dees lean hogs in a moment. I'm not quite sure. This video shouldn't go more than 5 or 10 minutes. This is basic, just to give you a sense, kind of a feel for what could be provided. Now, these are all daily charts. I'm finding that let me pull up a weekly chart. This is a weekly chart. It can be done. You do have structure here all week long. You've got this is the July, October lean hog butterfly weekly chart all week long. Next week we have supported 11, negative 11.3. Sometimes I forget to throw the negative in there, and I'll just assume that you know exactly what I'm talking about. So that is support for the week ahead. I don't know if we'll get down there or not. But I do think the daily chart, there's not a lot of data here. I think the daily chart provides more data to go by. And in fact, the same formation on Monday is a negative 11.275, and by Friday it's a negative 11.05. So that could be a bit of a difference, whether you're looking at negative 11.3 for the weekly chart, or by Friday it's actually risen. It's let's hear. Hold on a second. Negative 11.05. So if we settled Friday below negative 11.05, but not below negative 11.3, you'd have a sell signal on the daily chart, but not on the weekly chart. It could potentially throw you off a bit. So there's that. Let's take a look at the analysis itself. We have an ascending speed line here that came in. We closed below it. You can see how the behavior was, and then we almost tested this channel bottom. This is in early May, very early May. We settled below the speed line, which at that time coincided with this old 9.4 high. So we almost tested the channel bottom, and we came springing back. Actually settled back above the speed line only to come back down. I'm still going to call, even though I've got some degree of trepidation. I'm going to call now. If we did this, let's say on a daily basis, I think what I would do is I would have a series of support and resistance numbers in the video. This would be called a 3-star resistance area, negative 8.725. We also closed Friday below negative 9.40. So I think the emphasis is slightly in the negative camp as we continue through this week. And there is the possibility that over the next week or two, we could certainly test meaningful support, which once again begins at negative 11.275 and basically ends here at negative 12.050. So this is your range of support that could absorb selling in this spread, say through June. It's also a meaningful downside tipping point over that same time horizon. If we were to break this area, close below it, we're expecting at least a retest of this low of negative 15.4 within a matter of weeks. Now, upside, you've got kind of a stair-step situation here. I would say that if we close back above negative 8.725, you should respect the ability for this market to not only take out this high here, but actually continue on to this high area here, which is negative 6.725. So, I would have this as a 3-star resistance area. If we closed above it, the next target would be this 3-star resistance area. And I might change my mind a little bit about that. Let me just show you. We have a channel top, sorry. We actually have a channel top here at negative 5.6, which isn't a whole lot different than negative 6.725. So, this channel top is negative 5.60. And so to just sort of finish with this whole idea, I do think closing above negative 8.725 would likely yield 1, 2, 3 weeks bullish continuation into this negative 5.6 area where we could top out through June trade. So to sort of recap, we're bearish this week below negative 8.725, and you should allow a test of this negative 12 to 11 and a quarter area. I'm just going to rough it out over the next week or two. If we close back above negative 8.725, then I do believe while we could certainly get a nice give and take all the way up, you should respect the ability for the market to continue on to negative 5.600, rising daily within a couple weeks. All right, so that's the butterfly. I even have it labeled here in some of these areas. Let's move on to Ogdees lean hogs. All right, this is the Ogdees lean hog spread. You've got, a week and a half ago, we actually pushed into this low area. I'm sure you're well acquainted with this chart. Um, we never really closed above it. We pushed through it, but we never had a convincing buy above this old area of lows and settlements. The low settlement, I think, is this line here. Negative 13.525 is the low settlement in this whole range, and the actual low itself is 13.275. So 13.275 really represents the start of a range of resistance up to 14 even. 14 even is a channel top textbook. It is, I believe, the formation that you would need to settle above to indicate bullish continuation then within 1, 2, 3 weeks to 18 half. Let's just call it this channel formation, then able to contain buying. Let's say that we closed above 14 even, Wednesday, Thursday, Friday of this week. Then I think within a week or two of that, you should reach 18.5. And still, until then, this is your ceiling. And I'm guessing that you're aware of that area. Now, downside, we have a series of lows here, 9.275. There's 9.325. The actual low, this is kind of a worst case scenario. You also have some settlements at 9.675. So it's kind of a range. But, that's your floor of support for the week itself. It's not significant. You've got kind of a triple bottom here. There's only so many times this thing can be tested before it gives way. And I would not be an aggressive buyer down there. I do think the bottom line with this chart is this market needs to prove itself below this 14 even level. Until then, the market remains prone to continuing south. And if we settle below 9275 at some point this week, then these are Fibonacci wave counts. I don't know if I can describe very well here. This is a point A, B, C full wave, and this is an A, B, C full wave. Both of them are down in here, which is 1375 to 5125. You also have a channel formation down in here. On Monday, it's at 4 even. So this whole area is sort of your kind of like a step out and buy zone, especially if you're short following a settlement below 9275. There is a scenario where we once again run up in here. It holds through June. The market backs off. You could hold that short position, I think, all the way down into this zone conceivably. But as I said, closing above 14 even, 18,550. Now I'm getting long-winded here. I don't know how winded I would be in the video, but once again, I would point these levels out. Some of these are very static. This channel formation, by Friday is still 14 even. Maybe you could say 14.025. This channel formation on Friday is 18 and a quarter, so it drops, quarter point or so. Let's move on finally to this graph. This one is a little frustrating, I will say. The chart formations, this is the Ogdees live cattle. You've got a 50% retracement that held a couple of weeks ago at negative 3,475, and that was a 50% retracement from this high to this low. And so that is, I think, kind of the de facto ceiling for the week ahead. You've got a low settlement price and a series of lows here at negative 490. I do think if they put out a new low below this recent low here, which I believe was this day, negative 490 on the 25th of April, this market continues south. And it looks similar to that last chart in that we'd have a channel formation then down right now at negative 6075 and dropping daily. So closing below negative 490. Yes, you've got a spike low here at negative 5275, and certainly the market could bottom out there for a day or two. But I think the emphasis would be negative into later May if we close below negative 490. And inversely, there's lots of wiggle room here. I could finesse this very tightly. There's an old low here at negative 4425. I don't know if you day trade this stuff or if you lock in for weeks on end. That would be a good question to answer. But let's just say this, if we closed above, there's no indication right now that we're going to test this negative 2550 until or unless we settle above negative 3475. And then you're just a matter of days away from testing this formation, which is meaningful in that it can contain buying through June. It's also a meaningful upside continuation point over that time horizon. In fact, if we took this channel top out. Goodbye to these highs. You know, you've got this high here at negative 1.675, and that would be violated within 3 to 5 days, I think. And where would this market go? That's a good question. The more well-defined a channel formation is, and this is how I'll finish this, the more I like to use these double channel extensions. This is just an eyeball right here, right? If we settled above this, I would anticipate this formation here. You'd also have a Fibonacci full wave count up here, and I don't see that, but you do have some other Fibonacci here in this same vicinity. So that's it. This is just an idea. If you wanted to do this on a daily basis for all three spreads, I could do that. We would have to talk, if first of all, if that's something you would want, and secondly, we'd have to talk price. I don't even know right now because I just finished these charts. It is Saturday morning, and I'm getting ready to go out and play. So I'm going to send this over to you. We're at 11 minutes now. I don't think the average daily would take that long. I did a lot of extra explaining here. I would imagine you'd have a 5 to 8 minute video every day. I would upload it to YouTube. You'd have your own unique link, and then you would just watch it on a daily basis in the evening. That's all I've got to say. And let me know that you've received this, that the email got through. And then if you want to call me and talk about this, you can. If you want to send me an email, whatever the case might be. Okay, I'll talk to you soon.